Hi, it's Joe Mazumdar from Exploration Insights. I'm doing an interview here at the September edition of the Metals Investment Forum, and with me today is Jon Gilligan, the President and CEO of Liberty Gold. Hi, John.
Hey, Joe. Thank you very much. Delighted to be here.
And we're doing this remotely because you've been traveling a lot. I've been traveling a lot, but I saw you at the Precious Metals Summit. You've been to the Denver Gold Show, so I'm just getting an idea of your sentiment going from the Precious Metals Summit, which is probably companies more in your market cap, to now going to the Denver Gold Show, where we have the Newmonts and the Barricks and other Agnicos of the world. So, what's the sentiment right now? With gold breaking records and also the GDXJ doing the same.
Yeah, look, Joe. You saw it at Precious Metals, and it's kind of been repeated here at in Denver. I mean, there's a lot of happy people walking around, right? I think it always pays to have a mining conference when the metals price have gone well in your favor. So I think overall, I think people are excited, cautious optimism about where the gold price is going. You've got your people who are sort of the gold bugs who are back in plus 4,000 before the end of the year. And then there's the sort of the more cautious, oh, maybe it's going to come off. In terms of the difference between the precious metals at Beaver Creek and here, the producers are clearly flush with cash. They're doing very nicely. I get the sense they're kind of trying to figure out what to do with it all. That's they're sort of reflecting now. Do we pursue M&A? Do we put money into organic growth? What do we do with it? And I get the sense that there's a sort of almost a pause while they kind of try and figure that out. So there's a sense of like anticipation of what are we going to do next.
And what I've been seeing on the M&A side is that the majors, with the mega majors, let's say the Newmonts and Barricks, selling into this optimism to people that now can raise funds. Hemlo being vended out, coffee
Yeah.
catching a bit in the Yukon, but then you are taking probably advantage of the sector of the precious metals spectrum that can actually show growth, which would be the intermediates. And so, could you speak to us about what attracted somebody like Centara Gold that has a lot of cash because they had to vend their portion of their, I mean, get out of Kumtor or
Yep.
Kyrgyzstan, and now I guess they're looking to grow. And so, give us an idea of what Centara saw in Liberty Gold.
Yeah, look, I really like the Centera guys, and I like their strategy. They've got a bunch of internal projects. They've got organic growth more than they can handle. Obviously, Kames is looking like, what do we do with Kames? How do we take it through a development sequence? They've just announced Goldfields, which is the old Gemfields development. I think they've got a lot on their plate internally, but they've also got this outward-looking external focus about what's next. What can we get into in the relatively undervalued space of the sort of the explorers or the junior developers? And sort of, to a little broader comment, what we're seeing in terms of talking to investors is people now looking for opportunity in the market. I think there's now a general recollection that, or a general recognition that the developers are starting to offer a compelling value proposition. As the metal prices keep going, they're undervalued. Here's a nice way to put my funds to see that growth opportunity. So I think the movement you've seen in the developers is that people looking for upside opportunity, relatively rapid opportunity for share growth. Centera, I think, are very smart operators in that they've got cash. They're looking for toeholds in projects that they not necessarily will acquire, but could be something that they might acquire one day, and they want to give themselves optionality. I think they back quality projects, or in their view as a quality project, has the right size footprint to be a significant asset down the road. And I think importantly for us, has a technical team that can get the job done without Centera having to put an awful lot of time and effort, and them having the confidence that this thing gets delivered through feasibility in a professional and sensible way. And I see the Centara investment in us as a real sort of ticket or endorsement of the asset principally, but also the approach we took to technical approach we took to pre-feasibility and the quality of the team we have in place to deliver through feasibility into construction.
Yeah, well, we've seen Centera, like you said, investing in a lot of exploration companies, and it's very much about the people. And they've
Mm,
invested in like
yeah,
Azimut and Headwater and companies like that because they trust the people. So I gather that they feel pretty confident in your team's ability to advance this project, which you already have, and comfortable with the infrastructure and the ability to permit this project. That must be up there. But I hadn't realized actually how much actual experience they have in heap leaches because I was just looking at Mount Milligan, Kemess,
mhm.
and all their other projects. But they, like you said, Goldfields development projects, but they are operating. I think it's Oxut in
Oxford.
Turkey. Yeah,
Oscoot. Yeah,
yeah,
absolutely.
and
They've
so
got in-house capacity. They've got really good technical people. We had some really interesting technical but debates with their folk about what we were doing and why we were doing it, and it was a real interaction from a technical perspective of really smart people in the room, and it was kind of exciting to be in that process.
So the other thing that I'm seeing, I mean, with your press releases, and that is the drilling at Black Pine. The majority of it is infill drilling, but you're drilling the, let's say, the northern extensions of Rangefront. And for people to
Yep.
understand, the Black Pine was mined before by Pegasus. Then you guys came in, and then the Discovery Zone. You've amplified that area where they have been some open pits, but Rangefront was discovered in 2021 undercover, and with the infill drilling and the potential removal of the heap leach pad, the legacy heap leach pad, Rangefront has the opportunity of being, the potential of being the first up in terms of which pit gets built, and additional ounces from the removal of the legacy
Yes.
pit. So, can we speak to not only the ability to discover this from nothing, because this is a legacy operation that this wasn't found, but
Right.
also, what else you're drilling right now with the heap leach and that to add potentially another 500,000 ounces.
Yeah, look, I got to credit the venerable Moira Smith and Randy Hannock with that discovery. It was an area that we used basic geology to sort of say, hey, there should be something here, largely structural geology and sort of downslope prediction. We drilled our first discovery hole, I think was October 20. And we had a sense at that point that maybe we'd hit 1 million ounces, and we carried that sense all the way through the drill out, and we drilled out 1 million, 1.2 million, I think, in 18 months, which is no one's doing that in the Great Basin right now. Um, and we've been progressively drilling it. We had a 20,000 meter program last year where we drilled the edges. We could see that the mineralization was extending beyond the margins of the resource shell that we had. And now we've gone back with our 40,000 meter program for feasibility, and we've extended it even further. And you're quite right with that, with the discovery of somewhere between 50 and 100,000 recoverable ounces in the heap. That heap now unloads an area of ground to the north of Rangefront, and we know that they drilled holes, condemnation holes underneath the heap, and found low grade. For them, it was low grade, 0.3, 0.4. For us, we'll take that. Thank you very much. So we've now got this large area to the west and to the north, some 600 meters, with the right stratigraphy. It's got the right structure. We've got mineralization top and bottom, north and south. And I think it doesn't take a lot of imagination to imagine that we've got some level of continuity of gold mineralization through that area. And I think the real important thing, two key things here. First of all, we're seeing incremental growth of these mineralized zones by persistent and careful drilling. And we're seeing mineralized centers link up as we drill the sort of nexus between the two to create sort of more singular, larger mineralized zones. And I think that's going to be the characteristic of this asset as it goes forward. The real importance of Rangefront, of course, as you rightly say, it came last in the mine sequence because it had this sort of reasonably high strip relative to Discovery. Discovery was top of the hill, Rangefront was down the bottom of the hill, right by where we're going to put the leach pad. With this new drilling and with this increase, particularly of near surface high grade, there is a real possibility we can mine, first of all, at Rangefront, down the hill, within a couple of 100 meters of the new heap. So easy haul, easy access, lower overall mining costs from a haulage perspective. Rangefront on its own has 10% higher recoveries from a leach point of view than everywhere else in the deposit because it's very low clay and it's lower down. So from a sort of operational startup risk, it really mitigates that early risk and gives us a really good shot at a low risk payback period. So I'm really excited with where it's going. It's a great proxy for how the rest of the deposit over time is going to grow. And once we get the resource model complete at the end of the year and get into that mine planning piece, that'll be where we really firm up this idea that this is a great place to start.
So just for the audience as well, I mean, not all heap leaches are the same. I mean, we're talking low grade, but one of the big advantages of Liberty Gold's Black Pine is its run of mine. So what does run of mine have in terms of value to a mine plan? I mean, in terms of capital intensity and operating costs.
Sure. So on a sort of cost level, run of mine heap leach is about $2 a ton to operate the process. That's all of the processing costs. If you have to crush it, which is the next sort of level up, where you need to reduce the grain size to somewhere from 3-inch to quarter-inch, you're talking $3 to $5 a ton for crushing. So your processing cost goes from $2 a ton to $5 to $7 a ton crushed. That's an awful lot more cost, and you've got to have an incremental gold recovery to pay for that crushing. Otherwise, it's not worth doing. In our case, we get a very flat grade recovery, grind recovery curve. So crushing the rock there's not much additional gold that comes out, and it doesn't pay for that cost of crushing. With respect to capital, obviously at run of mine, you don't have to put in a crusher. You don't have to put in an agglomeration unit. You don't have that cement use. You don't have to put in grasshoppers and a stacking system. So that's $100+ million of capital that you don't have to put in up front for when you simply do a truck dump. So from a capital intensity point of view, it makes huge sense. From an operating cost, it also makes huge sense. But the truth is there aren't that many ore bodies that will let you go run of mine. I think it would be, and it's probably fair to say that in the Great Basin, the majority of oxide deposits need to be crushed so you get up to that sort of 70, 80% recovery. We're very fortunate. We have one of the ones that doesn't, and we can achieve that 70 odd percent recovery with just straight material blasted and dumped on the heap.
So, with the Centara investment, potentially the last funds coming from the sale of assets in Turkey, potentially more money coming in from some warrants being exercised, uh, you're fully funded. Is that the case to the end of 2026 when you would make a
Yeah.
construction decision?
I got to tell you, Joe, it's a nice thing to be able to say, but yes, we have funds that'll take us all the way through to under the case you described with the warrants and Turkey coming in and the Centera money and the money we already have. We are good through to the end of 27, where we would make a construction decision. Um, as I mentioned previously, the feasibility study is due in October, and that'll be a real material event for us because with the feasibility and study in hand, we can go out and start to talk project finance to actually get a financing package to construct this asset in early 28. And the sort of monies that we're going to need, I mentioned we're sort of targeting about 350 million for the build, which is a fairly reasonable, modest number for what is a quite simple and straightforward build. We would need some working capital. So, as a placeholder number right now, we're looking at how do we raise $400 million. And we've been in conversations with the debt companies, with banks. They've been following Black Pine, repeatedly over the last few years. They're comfortable with the team. They like the 17-year mine life and that short payback that we're targeting. Payback at current spot prices would be a year. So that's a pretty attractive financial opportunity. So that's a very attractive opportunity for a debt company. And we would see something like a 300 for debt and 100 for equity. And we do not think we need to go back to shareholders until we need to go for that 100 million equity. And that's probably sometime in 27, somewhat ahead of a construction decision, so that we're fully funded and financed to then kick off in early 28 to build this thing.
All right. Well, I guess we'll wrap it up there. I'm really happy to see Centara come in, and the idea that you guys are fully funded, and kudos to advancing the project as far as Liberty has advanced it. So that's it for me, Joe Mazumdar, Exploration Insights at the September edition of the Metals Investment Forum with Jon Gilligan, President and CEO of Liberty Gold, advancing the Black Pine Oxide Gold Project in southern Idaho. Thanks a lot, John.
Thanks, Joe. Really appreciate the chance to chat, and we love Exploration Insights. I'm happy to be here, and thank you very much for your interaction and engagement.